Let's get chatting with the management on our show of Pearl Global. Pallab Banerjee, the Managing Director and Group President of the company, joins in. There are three things that we'll discuss with him. Most importantly, the impact of US tariffs, expected synergies from the recent free trade agreements that we've signed, and the company's own Capex plans in Bangladesh. Thanks a lot, Pallab, for joining in. Season's greetings to you. We're talking about the US tariffs. There is likely to be, some sort of announcement that may come by. What would that entail as per you? That's point number one. And secondly, we're talking at a time when the rupee is over 90 as against the dollar, despite the strengthening that we've seen recently. What proportion of your currency exposure is unhedged, and how do you benefit from that?
Thank you, first of all, for having me on the show. Yeah. US, we don't know what's going to happen.
Exactly.
In fact, it's been quite a journey. Every day we get to hear that something is going to happen. Now, then we don't know. So it's better for a business that we continue to plan, mitigating whatever risk that we have from US. Especially that's only where exposure is to US, which is affected is only India. As you know that we have manufacturing across Bangladesh, Indonesia, Vietnam, and Guatemala, apart from India. So that's growing fine. So that's not impacted with the US, what we have a penalty tariff in India. So yes, first we want to get this 25% of penalty tariff removed from us. So that's the first, I think, is a wish. And apart from that, you're talking about the currency in our favor. That's a tailwind, I would say, but then we can't depend on that. We need to have US as a good market.
Yeah.
As a company, we have been diversifying from US actively for the last few years. So the growth in the other markets have been quite phenomenal for us. So that's helping us. As you can see that US is now almost less than 50%, I would say, the exposure, as we have grown over the years in other markets.
All right. Hi, Pallab. Good morning. Good to see you and Nigel on this side. You'll be hoping that Mr. Trump has maybe a Christmas gift for everyone. And reduces the tariffs from around this 50%. But we live in hope. As you're saying, you've been hearing today, tomorrow, day after. Hopefully, it's in 2025 itself. That said, Pallab, give us some more clarity. You had told us in the past as well, you're looking at shifting some part of the business from India to Bangladesh and Vietnam. Has there been any progress on that front? Is there, has there been some movement? As a percentage, how much does non-India manufacturing now constitute?
So India, for us as a company, India is contributing around 25 to 27% of the top line. So that's the trend that we have been seeing over the years. Yes, we wanted to grow India. We had invested some capital also in the last year. So this year we are expecting a growth, but unfortunately for this US tariff situation, it's more of a stagnant at this point of time. We are developing customers across other geographies for India. So that's in progress. In terms of, the customers from US, they have been asking us not to, really focus on India for the short term because the tariff disadvantage. Nobody is ready to take that impact of this 25%. So as a result, they have been pressurizing us to either give the 15%, discount, which translates to this 25% tariff almost when they land the goods, or to manufacture it out of Bangladesh and Vietnam, where we have our facilities. So that's the kind of, discussion. We haven't gone absolute zero in India, I would say, for US market, because always there's a hope that things will be changed quickly. And certain products that are a very strong handwriting in India, a lot of textiles and fabrics are India-based. So that's continued to be in production in India. But yes, whatever we produce in India at this point of time, we have to give that amount of discount so that they don't get that penalty effect as it lands in US. So that's how it's at this point of time. So it's not a sustainable one. So definitely we have been increasing the other markets like Japan, Australia, UK. Of course, like we are looking forward to the FTA discussion with the European Union. So those markets have been growing up in terms of percentage share in India as well.
I just wanted to clarify that. You said 27 to 28% of what you sell is manufactured in India, right?
Yes.
Perfect. You spoke about the other geographies as well. Three major FTAs that have been signed. There is one with UK, there is one with the Eurozone, which we need some clarity on right now. Oman was also signed on December 18th. all of this, what could the quantifiable benefits for these be for you?
So compared to US, UK market is almost about 1/4 or 1/5, you can say. So it's a small market, and we have been already servicing those customers from Bangladesh and Vietnam to certain extents. But you see, the exposure in Bangladesh for this, they had the advantage of the tariff because of LDC status of Bangladesh. So the huge concentration of this UK and Europe is there already in Bangladesh. So now most of these customers would like to diversify if India comes at par. So that's where they have started placing business in India with us with the anticipation that this benefit will be kicking in very soon. So we expect this to happen anytime from now to March, most probably, for UK. And the news is that FTA for European Union will be signed in Jan. So that's a good news. We look forward to it excitingly. So that will be a good move for India.
Right. And if you could quantify your,
My numbers, if you see, the US exposure is approximately just 50%. Below 50, but then Europe and UK would be around 25% approximately for the growth. So a significant growth can happen from India if both these treaties or FTAs will get kicking.
All right. And finally, before we let you go, you have a 110 crore Capex plan in Bangladesh and a 20 crore Capex plan in India as well. What does all of that mean in terms of asset turns? What's your revenue and margin growth prognosis from here on? So
we do definitely have a goal of better asset turns, anywhere between 3, 4 or above. That will be our wish list. So then in terms of ROC that you've seen, we have been doing it above 20 or around 20. So that will continue to happen. We had plans in Bangladesh which we have gone ahead with because that's a country which is quite dedicated for this industry, I would say. So we continue to take that benefit of the strength that Bangladesh has. So the Capex that we have planned for in Bangladesh is for a new greenfield as well as a laundry. A lot of our denim is done in Bangladesh as well. And India, we have started investing. We have invested in the populous states of India, like Bihar, and then Orissa and Vizag, and all those other places we have been growing. So yes, if this US tariff situation improves or it changes, then that will be a big boost for India as well.
Okay, all right, Pallab. And I'm sure what's on your Christmas wish list will be a lower tariff. So hopefully the next time we chat will be on the tariffs actually coming down. Wish you a good end of the year and see you in 2026, if not earlier.
Thank you.